How inflation impacts your savings and what to do about it. Inflation is a silent wealth killer. You might think your savings are growing, but inflation is steadily eroding your purchasing power, making it harder to achieve your financial goals. Over time, what you can buy with the money you've saved decreases, even if your bank balance stays the same. This video will explore how inflation impacts your savings, and more importantly, what steps you can take to protect your wealth and make sure your money works harder for you. Before we explore the details, don't forget to like this video and subscribe to the channel for more content on managing your money and protecting your wealth. 10 How to protect your savings from inflation. Inflation can erode the value of your savings, but there are steps you can take to protect and grow your money. One effective method is investing in Treasury inflation-protected securities. Tips. These government bonds adjust in value with inflation, helping preserve your purchasing power. TIPS are a low-risk, reliable option to ensure your money grows steadily without losing value. Another key strategy is diversification. Relying solely on low-interest savings accounts leaves your money vulnerable to inflation. Instead, consider investing in stocks, real estate, and commodities. Stocks in sectors like technology or consumer goods often outperform inflation, while real estate can appreciate over time. Commodities like gold act as a hedge against rising prices. Dollar cost averaging is also useful. By investing a fixed amount regularly, you can smooth out short-term market fluctuations and buy assets at different price points. These strategies together help reduce inflation's impact and ensure your savings continue to grow. 9. Best inflation-proof investments. When inflation rises, it's crucial to protect your investments. Some assets perform better in inflationary environments, while others can lose value. Let's compare a few options to see which ones are best for preserving your savings. Stocks tend to outperform bonds during inflation. Bonds can lose value as fixed interest payments become less valuable over time. In contrast, stocks, particularly in sectors like consumer goods, healthcare, and technology, often benefit from inflation, as companies raise prices to cover higher costs. While stocks offer long-term growth potential, they come with more risk. 8. Success stories. How people beat inflation. One of the best ways to understand how to protect your savings from inflation is by looking at real-world examples of people who've successfully navigated it. For instance, consider an investor who was heavily invested in stocks during the 2008 financial crisis. While many others saw their portfolios lose value, this individual diversified into inflation-protected securities, such as TIPS, and also held some real estate. As inflation rose in the years following the crisis, their investments held strong or even appreciated in value, while many others saw their savings erode. Similarly, there are many stories of people who, by shifting a portion of their savings into gold during times of economic uncertainty, were able to maintain their purchasing power as the dollar weakened. These people didn't just react to inflation, they took proactive steps to ensure their wealth was shielded from its effects. These stories demonstrate that with the right strategies in place, it's entirely possible to protect your wealth during inflationary periods. Learning from others' experiences can help you implement similar tactics in your own financial plan. 7. Real-life experiments. A practical way to understand how inflation affects your savings is by running your own real-life experiment. For example, you could shift a portion of your savings into inflation-hedged investments for a year. One approach could be moving 50% of your savings into stocks, particularly those in industries that tend to perform well during inflation, like consumer goods or energy. You could allocate another 25% to real estate, either through direct property investment or REITs. Finally, you might use the remaining 25% to invest in gold or TIPS. At the end of the year, compare how your portfolio performed against your original savings account. Did your investments keep up with inflation, or did they outperform it? Conducting experiments like this allows you to see firsthand how your strategy is working and how well your investments protect your savings from inflation. 6. Simplifying complex topics. Inflation-linked assets are often seen as a key component of a strategy to protect savings from inflation, but they can seem complex. To simplify, let's break down a few common options. TIPS, Treasury inflation-protected securities, are government bonds that adjust in value with inflation. They pay interest every 6 months, and their principal value rises based on the Consumer Price Index, CPI. TIPS offer a low-risk way to combat inflation. Similarly, inflation-linked bonds, which can be issued by governments or corporations, adjust their payouts according to inflation and offer predictable, low-risk returns. Commodities like gold, silver, and oil are also considered good hedges against inflation, as their value typically rises when the cost of goods increases. You can invest in commodities directly or through ETFs that track their prices. These options provide several ways to protect your savings from inflation without taking on significant risk. 5. Tailoring inflation strategies to your situation. The impact of inflation varies depending on your financial situation. For young professionals, time is on your side, so a long-term strategy like investing in stocks or real estate can help you combat inflation and benefit from compounding. Freelancers and entrepreneurs, on the other hand, face more unpredictable income, making it important to have a diversified portfolio and build multiple streams of passive income. Additionally, saving aggressively during high-income months and setting aside emergency funds is key. For retirees, inflation can be especially damaging if you rely on fixed income sources, so allocating part of your savings to inflation-hedged assets like TIPS or gold can help maintain purchasing power. Tailoring your approach to your specific situation is essential to protect your wealth from inflation. 4. Understanding the emotional impact of inflation. Inflation isn't just an economic issue, it's a psychological one as well. The fear of losing purchasing power can lead to irrational decision-making. For example, people may rush to sell investments in a panic when inflation rises, potentially locking in losses. It's important to manage the emotional aspect of inflation by staying focused on long-term goals and not reacting impulsively to short-term market fluctuations. Building a solid financial plan and sticking to it, even during inflationary periods, can help you make rational decisions that preserve your wealth. 3. Generating income to beat inflation. Generating passive income is a great way to combat the effects of inflation. Instead of relying solely on savings, consider creating income streams that can keep pace with inflation. Real estate. Renting out property can provide a steady income stream that grows with inflation, especially as rental prices tend to increase during inflationary periods. Dividend stocks. Investing in dividend-paying stocks can provide consistent income that increases over time, especially if the company raises dividends to keep up with inflation. By focusing on creating passive income, you can generate cash flow that helps counteract the impact of rising prices. 2. How green investments can protect against inflation. Sustainable investing, or ESG, environmental social governance investing, has gained popularity as a way to align your financial goals with your values. But did you know that sustainable investments can also help protect your wealth from inflation? Green companies and funds that focus on sustainable business practices tend to perform well in both good and bad economic climates. As inflation rises, companies that are focused on sustainability often find ways to adapt, making them more resilient in the face of economic challenges. Investing in these companies can be both financially rewarding and socially responsible. 1. Staying informed with Google Trends and financial tools. Staying on top of inflation-related trends is essential for protecting your savings. Tools like Google Trends can help you identify growing concerns or shifts in the market related to inflation. You can track terms like best inflation-proof investments or inflation in 2025 to stay ahead of potential changes. Using platforms like Yahoo Finance or Bloomberg also helps you keep tabs on economic news and inflation forecasts. These insights allow you to adjust your investment strategy based on the most current information. That's a wrap on how inflation impacts your savings and what you can do about it. From diversifying your portfolio to understanding the best inflation-proof investments, there are several ways to protect your wealth and make your money work harder for you. If you found this video helpful, don't forget to like, subscribe, and turn on notifications so you can stay up to date with more strategies to protect your savings and invest wisely in uncertain times. Thanks for watching.